Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at CMG SKX NKE and TWTR. CMG today, a big time bear trap. We saw some fundamentals and guidance and blah, blah, blah. Certainly, I'm not interested in the numbers. I'm interested in the market reaction. And initially, it was a bearish reaction. Pre-market, the price dipped real quick to 380. And then the bulls showed up in a huge way. And we saw a bit of a short squeeze where a lot of shorts were trapped. And the bulls ran with it. So clearly, it was received bullish by the market. Here we are, indecision today in terms of profit taking towards the end of the day. But we did close over the 200-day moving average resistance of 413.68, and we are in breakout mode above the upper Bollinger Band. So the gap up held in the sense that we didn't fill that gap, certainly, and we're going to be watching this upper Bollinger Band for support to see if the bulls can maintain this breakout. So the level I've been highlighting on CMG was 419.30, and although we broke above it, I want to see how the rest of this week plays out over the next 3 days. I want to see if the bulls can hold these gains. If we were to see a rejection and some weakness the next 3 days as we head back down towards $400 and we have a long upper wick, then that break would not be good enough for me personally. It's less than $1 on a $400 stock, and it all depends on how the weekly candlestick closes for me personally as to whether or not I'm going to be believing the bulls on this move here. So certainly they held up well today. 3 trading days left to go. We'll see if the bulls can remain strong. Support is going to be 408.20 and resistance is up at 420.23. If we get a new high over 420.23, that will go a long way at proving the bull's strength to me this week. SKX did get above that middle Bollinger Band on the daily and hit a higher high here. So the next resistance we're looking at is the 200-day moving average, which lines up with the upper Bollinger Band. That's currently at 26.30, and the bulls are in control of the short term, keeping an eye on the bull MACD cross. And after we've found support down here at 23.96, the bulls have been in control, forming higher lows and higher highs. And the weekly time frame, the bulls are showing back up after some indecision last week. So the weekly chart had us looking possibly for further continuation of a pullback because this gap is still here at 23.09, but with this bull move over the middle Bollinger Band and that higher high, we are looking good for the short term, and that 200-day moving average resistance is going to be tough if the upper Bollinger Band stays at that level. We will likely see that Bollinger Band flatten out and then begin ascending. The question is, will the price reach that level before it? And if it does, that's a level to scout for a bearish entry in my opinion. That 200-day, if the upper Bollinger Band resistance is there as well. So the weekly time frame, we had that breakout, normal healthy consolidation, and now the bulls are looking to continue. But in order to break the longer-term downtrend, bulls are going to have to get above 32.71, which is still about, let's see, $6 out of 25. Math on the fly, we're talking over 20% from this point. So certainly strength after this bull break, but a long way to go to break this longer-term downtrend. NKE, another day of consolidation and a close at the low of the day, has us looking for further continuation to the downside. So at this point, because of the volume and because of the contained move, it is normal and healthy after the breakout. We'll look to see if the bulls can hold the 100-day moving average, 52.85. There is a gap down here at 51.33, but as of right now, the bulls are strong enough that I'm just going to watch this one. What I would want to see for a bearish entry is a pullback, a support to be established, another move up towards this resistance of 54.09, and then for us to have a bearish entry off of that resistance and use it as a top fishing play where we have that clear 54.09 level, and we would know if the bulls break 54.09, we need to exit our bearish positions because the bulls are still strong. So I don't like a bearish entry at this point because this consolidation does still look bullish to me, even though we did close at the low of the day. I want to see a higher low, a lower high, and then a lower low. Ideal scenario. In the weekly time frame, bearish reversal candlestick, and we have not back tested the middle Bollinger Band yet at 52.36. We can anticipate that's going to be some solid support after it rejected the price 4 weeks over the past couple of months. So the resistance at 54.09 definitely worth watching, and its previous support here, 53.93, we bounced off that level, and now it's acting as resistance as the bulls are struggling to get above it. So keeping an eye out for a new support to be formed, and then watching for a move back up towards 54. Twitter, there's our bearish reversal candlestick. We did not fill the gap just yet. 17.87 was that level. We got up to 17.78, so 9 cents shy, but a clear profit-taking candlestick. 2 rejections in a row from the 200-day moving average resistance. Bearish reversal, inverted hammer, and a red day tomorrow will confirm that. Support, we're going to be looking at 17.19 and then 17.11, the lows from the previous couple of days. And we're rejecting from the 50-week moving average resistance of 17.48. Just like we rejected last week, we still have 3 trading days to go. This was not an ideal bearish entry for me. I wanted that gap fill to be a bit more comfortable. So still sitting on the sidelines and picking a spot as to where I like a bearish entry, but not just yet. If we close this week over the next 3 trading days below 17.48, I'll be a bit more comfortable with a clear second rejection in a row from the 50-week resistance. But as of right now, I'm going to keep an eye on this 200-day moving average, and we'll see if the bulls have any momentum left this week to head up to 17.87 and get that gap fill. So I appreciate you watching. We'll check back in tomorrow and see how it plays out. Most interested in CMG. There was a ton of volume and volatility there. Some nice trading opportunity. We had some bearish plays at the end of the day, and we're going to be looking to see if this move is for real for the bulls on the weekly time frame. Thanks again.